Here we go. Once again, this is TerrenceRe with another stock market update. What you're looking at on the screen is the SPX. You can see it is right at the expected move for the week. You can see, I'm going to try to zoom in a little bit for you. Let's take the indicators off. Gonna hide these. And there you can see right there, you can see that right there at the upper end of the expected move for the week. And we are resting right there with one more day to go. So what do you think we're gonna get tomorrow? You think we're gonna break over, or this gonna hold this resistance, and maybe we get a flush back down to the downside? It's possible. So basically, what's going on today? We did get um, the Nasdaq is still up, leading the way to the upside. You can see it's saying up 0.75% almost right now, but it was up a little bit more than that earlier. Let's pull up the QQQ. And you can see that it kind of broke out, took out this high, and you can see where we're at right now today. And it has paired some of those gains for the day and pulled back some. We also got the Dow is up on 0.5%. Now, what I would say is pay attention to the Russell is not joining the party. And if you follow the channel, you know that I say that the Russell pretty much, your small caps and your mid caps, they lead the way. They're pointing downward at this point. You can see the Russell is negative on the day. And that comes from the banks. The Russell has a lot of, has more regional banks in it. So if we go look at, now keep your eyes on the screen, look to the right, and I'm going to pull up let's go to the sectors, and we're going to go to the financial services. Now, if you look at the financial services, you see a few greens in there. But if I take it and turn it that way, it's more red than it is green. And and most notable is Schwab. What Schwab is down. If we look at JP Morgan is down, as far as like big banks, Morgan Stanley is red on the day. Bank of America, Wells Fargo is red on the day. And so even Berkshire is red. It's in with the banks as well. So this is what's causing the Russell to be negative. Now, the market isn't going to go anywhere without the banks. The banking industry, and we can look at the XLF, which is an ETF, and you can see this chart. This is a horrible looking chart. First of all, you want to see up and to the right. You want to look at the chart, look to the right, you want to see it going up. This is horrible. Now, that doesn't mean that this can't retrace some of this amount. Well, we'll just have to see if that happens. I have been monitoring some of the chatter. Now, it's saying behind the scenes, officials are looking to limit the strain on community lenders by shifting an outside portion of the expense toward much larger institutions. According to people with knowledge of the discussions, that would add to what already may be multi-billion-dollar tabs apiece for the likes of JP Morgan, Bank of America, and Wells Fargo. There is says the FDIC considers forcing big banks to pay up after $23 billion hit. FDIC faces $23 billion in costs from bank failures. So there's a cost to this to these banking failures, and the government is trying to get the larger banks to take the brunt of that hit to cover those expenses. Thus why I'm short JP Morgan. I've been short JP Morgan just because of the chart. Like the chart, I'm gonna pull up the chart. I'm trying to quit bumping the microphone. Let's go to JP Morgan, look at the chart. So if you guys been watching, you watching my channel, you'll see for me that's a bear flag. Once I get that down move, that pullback, and then you take out that low, that's gonna be something for me to get short. Just like this right here, this up pullback, take out this high. was a bull flag, and you seen this. So I'm looking for JP Morgan to continue to the downside. My next target level is right around 120. And I just have a short call spread on there, which took a little heat earlier this week. So if we were to go back, let's see, maybe yesterday, I think that's when I did the roll. You can see where my short strike was at 130 and it got right up to 130. So what I did was I just rolled the option out in time, and that's the end of the end of the market. What I did was I rolled the option out in time. So we're gonna look at the chains. So this is something, once again, like I only talk about the stuff that I use. I use Tasty Trade. To me, it's the best, one of the best platforms out there. Just for one of the reasons I'm getting ready to show you right now. Pull up the chains over here. And so when we pull up the chains, we're gonna look at this position that I have on currently. The first position I put on March 24th, I sold a $5 wide call spread for and took in $1.44 in premium. It was when I put that trade on, at the time I put the trade on, it was showing 28 days. It was this right here. So my short strike was tested. And then I'm gonna get into rolling as well. So I was right here and my short strike got tested, meaning that price action came up to 130. So once it did that, all I did was move this spread. You see how this spread right now is selling for 174. Now let's see what it's selling for out at the 50 day. See the difference? Say 216. So what 174 before? That's what, $42. So if you owned that spread, that same call spread at 22 days, and you say, hey, I want to roll it out in time, because you want to give yourself time to be right. Right? If the market's going up against you, rolling and taking in a credit, reducing your cost basis. If you roll for a debit and you pay money, it's kind of like you adding on to a bad trade. I didn't add anything else on to this trade. I actually took in more money and got more time to wait to be right. Even if I'm wrong and I lose, I reduce the amount of money that I could lose in the trade. So by going by rote now, consequently, if I had bought this trade, I may not have been able to roll for a credit. And that's one of the things that you can do when trading options, especially when you're a seller of options. You can defend some positions that may be losing money. Like this particular position, I'm down on the position, but instead of having just 22 days, I got 50 days for the position to come back my way. So, and I reduced my cost basis. So with that being said, I do think that the banks are going to continue to downside. I don't see right now you know, um, they're mulling over reducing. So basically, during the Trump administration, there was a loosening of restrictions on the banks, on the smaller banks, and where if you had like you were below the 250 billion dollar mark, you didn't have to adhere to certain stress testing that the larger banks had to endure. And so with that being the case for SVB, even though the stress testing that was done still wouldn't have caught the issue that happened. They're still thinking about putting stricter regulations back on the smaller banks, which for me, I'm neither. What's my opinion on it? I actually don't. I wasn't in favor of them bailing out SVB, and I know all on TV they saying it's not a bailout. It's a bailout. It was a bailout. If they hadn't stepped in, and people will say, well, the money is in there for the FDIC. Yeah, the FDIC to insure up to $250,000. period. So they were supposed to do that amount. Anything above that, they money it should have been it should have been washed. And people say, well, why would people put their money in the bank? There were other things going on at that bank that's that doesn't go on at other banks. And they were taking extreme risk, and they were doing different things at that bank that was not being done at a JP Morgan and things of that nature. And so you have to allow these companies, banks, whatever they may be, you have to allow them to fail. If you don't, then there is no pure capitalism. You know, it's a quasi socialist system that we have, which is what I think it is anyway. Like, this ain't pure capitalism. It's only capitalism. And now I'm on my soapbox, but that's okay. It's my channel. Um, but now I'm on, it's only capitalism when poor people fail. And then they'll come and tell you, say, well, they gave out stimulus checks, this, that, and the third. And those stimulus checks wasn't enough to get you out of the rut that you were in. Most people that were that were getting by on those stimulus checks are right back where they were before any of that happened. And it's not like you almost it's like being in well, I don't want to curse. It's like being in boo boo. It's like being in boo boo, wading in it, right? You're treading. Think about like treading water, right? But take the water out and then put feces, and you're treading in it, right? And so you're already in the feces, so they throw you a life raft so you can keep treading in the feces. So yeah, you can rest your arms like you tired, so you ain't gotta tread. You can, but you can get on the life raft, but you still in feces. You still in crap. You just in the crap, laying on a lifeboat, and that's what happens. For there's no backstop in this country for poor people, right? It's only a way to like keep you where you at, so that you don't notice that you in it. And that's what happened. And then you seen all on Twitter. If you weren't on Twitter, you would see a lot of these guys that come on major networks and talk about capitalism and how the market will solve everything. These were the main people that were screaming the loudest and crying the loudest, wanting the government to step in and help save their money, save their investments. And that's what happened. And so um yeah, I am short in the banks. I just don't. I think that there's more behind what happened than what they're telling us. Uh, Now, that being said, that's just what I think, right? What you think don't mean won't make the market move. Technically, these charts look horrible. This is a great bear setup. Look at Goldman Sachs. Look at it. They look horrible. So no matter what I thought about them, I still was short any chart that looks like this. This is City. Any chart that looks like this, I'd short it. I don't care what it is. This could be it could be Apple. If Apple's chart looked like this, I'd short it. So you know that's that. Now, I do want to go back into buying and selling options, right? Earlier, I was talking about J.P. Morgan, and I was going into the role, and that role was made possible because of the option of me selling options for the most part. I did another role in coin, excuse me, which is Coinbase. Now, I'm actually this is actually, in my opinion, a bullish setup in Coinbase. Coin, I do believe, is a part of the Nasdaq. I'm not 100% sure. It may be in the Nasdaq, it may not be, but this is a bullish. Whether it's in the Nasdaq or not, it's moving with like a tech company, right? So I got a bullish setup here. So what I did was I did a broken wing butterfly initially. So if you look over here, you'll see I bought the 68, sold two of the 73, and bought a 76. So if we came here, the initial trade, I'm gonna come up here and hit go, and then I'm gonna come down here and model out the first trade. This is what the first trade looked like. I had sold the 73. Now, what ended up happening is the market started going down, going against me. So I wanted to reduce the amount of money that I was in the trade for. Now, this was a trade that I actually bought. I actually bought this butterfly, but I have two short strikes here where the guts are in a butterfly. So I bought these two back and then sold these two, and I basically moved my short strike here to a equidistant butterfly or equidistant butterfly. So you can see right here where it says roll, and you see a green 30 cent. That's just telling you that I rolled for a credit. I bought this one back, sold this one out, and picked up 30 cent. So I reduced. So when I put on the trade, I paid 115 for it. Me realizing like, hey, it's going against me. Let's roll the short strikes. I picked up 30 cent. So all I did was, once again, this is the initial trade. I bought these two back and then sold these two and moved my short strikes. That gave me 30 cent. So if you take that 30 cent and take it off of the 115, that means that now I'm just into this trade for $85. So instead of being into it for 115, I'm into it for 85. I reduce my cost. So even if the market goes away from me and I lose this trade, instead of losing 115, I lose $85. Just reducing your cost base, and you can do that with options all through. If you have a large portfolio, you can manage your portfolio the same way. There you can manage like stocks that you own. You can sell stuff against it. There are a plethora of ways to maneuver your account and to reduce your cost basis, and generally you're doing that when trades are against you. If you just own the stock and the stock just going against you, you basically just down on it. You can either close the trade, sell the shares off, or you can use options to help reduce your losses. Until now, who knows? Now, Coinbase could turn around like I think it will and maybe give me this pop up into here, and then I can make money on the trade. So the next thing with this trade is I got 22 days. Now we'll see what happens when the market comes this way, and we'll see how what it looks like when it gets there, as far as like taking profit and things of that nature. So hey guys, you watching this video, do me a favor, hit that like button. It don't cost you anything to hit the like button. Um and share the video if you get something out of it. I wanted to talk about buying and selling options, and um, what are some of the pros and the cons of buying and selling options. And I think in this video, I think I covered that a little bit more. We can go a little bit more in depth. We could be here all day, make this video super long. Just the main thing is, when you're buying options, time works against you because you're buying something that decays. It's like you're buying a decaying asset. When you sell an option, you are selling something that decays. So the time is on your side. So let's pull up, before I get off, let's pull up Tesla. I want to make sure. Now let's just say, don't pay attention to anything on the screen because that's really not important for what I'm talking about right here. Let's just say I am bullish Tesla. I think Tesla is going up. All right. Now, if you want to buy this option, now you got to figure out what Where on the option chain do I want to be? Excuse me. Now, let's just go. Let's say we're gonna go. Let's go 22 days. We're just gonna do the monthly for April. Now, if you buy, now you gotta pick what strike you want to buy. Now we're gonna. What do you think? You want to buy right here at the money? Let's say you want to buy at the money. I'm not saying to. I'm just saying let's just say you do. You're gonna pay $1,270 for this option. Now it's telling you, if you're looking at this right here, your probability of profit is 33%. You have a 33% probability of profit. The nowadays, the technology that we have will tell you if you're going to trade, you should be. I don't understand why anybody out there would be using any other platform besides Tasty Trade to trade options. If you want to know, like, it's literally telling you, like, hey, you buy this option right here, you got a 33% chance of making money. Do you still want to buy it? Now, 50%, if you say, because you're paying $12.65 for it, if you say, hey, I only want to make 50% of this 1,200, right? Which would be, let's just call it, make it 600 because it's 12.65. Say if I only want to make $600, you do have a 56% chance of making that. So, but that means that, so what that tells you is once you get up to like around 1,800, you need to be closing it. So you really risking two to make one. But most people don't do that. Most people buy the option and they want to go to the moon. So you holding it, you holding it, and then next thing you know, it was a winner, and it comes down. You gotta let the math. The math is telling you. Now this is buying this call. Now let's say I come on the other side and say instead of buying this call and paying $12.65, what if I just sell this put? What if I sell this put at 195? Now look at the premium I take in. 1185. I'm taking in $1,185. Now the system is telling you right there, I got a 63% probability of profit. Now, why would you choose the other one? Just look at the math. Why would you choose the other one? Why? Why? I'm gonna do it. It just don't. I don't understand it. There are times when buying are more advantageous than selling, but this just ain't one of them. In this particular instance, at 22 days. Now, I actually am in favor, like if I'm gonna buy, like I like going further out, buying like leaps. Leaps aren't as susceptible to theta decay because you're further out in time. So, and if you want to make 50% of this, you got a 73% chance of making 50% of 1185. 73%. As opposed to the 56% of the other one. And so it's about almost the same. It's about a 80 something dollar difference. So basically you might make what, 550, you got 73. Why even choose the other one? And it's, I could go to either one of these. When you buy an option, you need to be right. You gotta be right directionally, and now you're gonna make more money if you buy this one and you get that pop. And let's say Tesla goes on a rally, like you catch it on one of them days where it's up 10, $15, and it's it's up, it's up. You catch it on one of those days where it's some news come out, you could double your money. But your timing gotta be right. Your timing don't necessarily gotta be right on selling a put. You just need to understand the mechanics of selling a put. Me personally, instead of buying that one, I probably would sell the 30 Delta, come out here, or even better yet, I like to sell the 25 delta 20 right around here. I'm selling the expected move, and just take this money out. You out here 172 and a half, 79% probability of profit, and an 88% of getting 50% of 395. Basically $200. Eh, why not take this? Why not get these $200? Try to get these $200 every month or so. Buying these, trying to get these home runs. And as far as I know, now I think a swim does have a way to calculate the to get those probabilities, and you can do the math on it yourself. With selling options, it's a little easier, and the system will tell you. So if you don't want to look at these down here, now this is a different, I think a different calculation how they do it. You can look at like use delta and kind of like so delta. Like if I sell the 25 delta, right? Roughly what's left. So you take 25 from 100, that's gonna leave you with 75. So some people, you would say roughly 75% probability of profit. Look, we got 76 right there. So you pretty much, can do that. It's not exact, but you kind of use delta as like your probability. If you don't have like if you're not on Tasty Trade, but I absolutely wouldn't be on any platform trading options that don't give me delta. Like you don't have where you can look at the delta. I wouldn't be on that platform trading options. And I think the major platforms do have it. They may not have like some of the other calculations, but you can, if you're good at math, you can do that. But this system does it for you. So I'm always, if I got my choice, I'm gonna rather be a seller of options that are certain, like I said, buying leap options or in the short term. In Amazon today, I bought this option right here at 103 because I was thinking that when the market opened, like, hey, I'm gonna get a quick pop and it's gonna get up to 103. It actually did get there today. I don't know how long it took to get there, but I was out of it. Once I seen it was moving slow, I bought it for 30. It was 30 cents per contract, and I sold it for 56 cents. So I made almost double money on a little cheap option. Those, but it's only 1 day to expiration. So if you're like doing something intraday, then I buy options, right? Because I'm gonna be in and out of the trade, and whenever you're gonna be in and out, sometimes it may be more to your advantage to buy than to sell. Sometimes. But hey guys, hit that like button, hit that subscribe button, please, and share the video and comment down in the comment section if you like the video. Comment what you didn't like about it. Tell me like if you if you want me to go further in depth on buying and selling. Of course, there I can go deeper. This rabbit hole go way deep, but I try to keep it simple so that the average person can look at this and understand. You know, can trade it without you ain't got to be a brainiac to trade, especially with Tasty Trade. Like use my link in the description and sign up. Yeah, I think they do give me some points or something towards some type of raffle or something like that. But I honestly think it's the best trading platform out there. As far as executing my trades, um, if I could put my 401k in here, I probably would, so that I could. It's just easy. Um, and it's designed by traders, like real traders that trade, and so everything is easy and it's up to date, and they're still making additions. If you're one of the people like me, I'm a big, I like to do a lot of technical analysis. They got all kind of stuff, all kind of indicators. They got them all. So everything's here. And with that, guys, I'm gonna be out. Peace.